months ago, I told you about how NextEra Energy was trying to buy a bankrupt company called Oncor Electric Delivery, the largest transmission and distribution utility in Texas, but was struggling to get the deal past the regulators. Since then, the deal was blocked by the Texas Public Utility Commission, and it died for good in June. However, Oncor is clearly too attractive a target for others to pass up, because last Friday, Warren Buffett's Berkshire Hathaway stepped in, offering $9 billion in cash for Oncor. Now we're hearing that Elliot Management, the big activist hedge fund that's also Oncor's parent's largest unsecured creditor, might be willing, perhaps in conjunction with other large creditors, to pay $300 million more than Buffett for this business. Still, we've reached the third attempted acquisition of Oncor, less than 2 years, and given that the previous deals fell through, I think it's worth taking a closer look to see if Berkshire Hathaway can actually close the deal, or whether Elliott and other creditors pooling together might be able to snare this jewel, or at least force Buffett to pay up for it. Let's check in with Bob Shepard. He's the CEO of Oncor Electric Delivery. Find out more about his company and why he thinks Berkshire Hathaway is the right home for it. Mr. Shepard, welcome to Mad Money. Good to see you, sir. Have a seat.
Yeah, good to see you.
All right, Bob, I've got to tell you, people at home are going to be confused. Because when they hear bankrupt, they think worthless.
Yep.
This is the exact opposite. Why does everyone want Oncor?
It is. Well, it's an interesting story. You've got to start with the LBO in 2007.
Right.
2007, this company was taken private in a $45 billion LBO. Goldman Sachs, KKR, and TPG buy the company to make essentially a leveraged bet on natural gas with the generation.
Right.
The state of Texas wisely said, we're not going to subject Oncor to that risk, hence a ring fence and a governance structure around us that has become the debate in this process. Now, by the way, that turned out to be quite insightful, because what's happened to the EFH side, as you've talked about merchant generators a lot, is what happened to natural gas prices. Essentially, they were making a leverage bet on natural gas. Natural gas goes from $10 to $2. You can't support the leverage. Wise move to ring fence Oncor.
Because your business is kind of, for our viewers, because we have Con Ed on regular, it's that pure business that can just be a great growth business if the area is a great growth area.
It's a great service territory, really robust growth,
including the Permian.
And the Permian. And with deregulation, we've really transformed the generation fleet in Texas. The most renewables in the country, transformed our gas fleets, and the investment to enable that, largely companies like ours, building out the transmission grid, building out the technology to allow competition in the marketplace. So we've invested billions of dollars, not at the expense of ratepayers, but actually to help drive bills down. Electric bills in Texas today are 25% lower than they were 15 years ago. You wish you had that up here. And that's the benefit.
That's pretty amazing. Everybody else is going up.
Of the way the market has worked in Texas and the way deregulation has worked. We've transformed our gas fleet, 18,000 megawatts of wind, more coming. And as that comes, we'll have continued investment opportunities to help enable all of that, in addition to the growth. So in the eyes of Berkshire Hathaway, strong business, strong cash flows, real good reinvestment opportunity. Makes us a great fit for Warren.
But here you've got Elliott, which is a very smart group of people. They own a lot of the debt. Why shouldn't their bid at $9.3 billion be considered superior to Buffett's?
Okay, and so I'll get to
it sure sounds like it.
You start with the current bid, right?
Okay.
Berkshire Hathaway is a great fit for us, and they'd be very supportive of our investment strategy. And what they did that NextEra and Hunt did not do before them, they were turned down at the PUC, or they were given conditions by the Public Utility Commission.
Very important entity. That's a really important
that they didn't want. Right. What Berkshire did, which you encouraged NextEra to do months ago, they went to Austin, said, we think you've got it right. The ring fence protected the company all these years. Right. We'll accept it. We'll even expand it. And they worked out a deal with the PUC staff, the Industrial Coalition, the Municipal Coalition, and the Office of Public Utility Counsel, the main four interveners, and they cut a deal. And so they said, we'll take your ring fence, Texas, because they're not afraid of an independent board. There's nothing to hide there. And they said, we'll take it.
But so will Elliott. I mean, everybody wants you as manager.
And we know Elliott well. They're great folks. They're our largest creditor.
Right.
At this point, it's just a conceptual deal. We've not seen any specifics from Elliott.
Okay.
So they're fine people. But all I know is what's in front of us is Buffett. And so the Berkshire Hathaway deal would be great for this company.
Right.
I just don't know enough about Elliott yet to know what.
Okay, fair enough. Now, this actually could be a needle mover. I know Berkshire Hathaway's only 10, 11% is this business, but Oncor, what are your growth prospects versus, say, the typical utility that you know we have on? We have AP on, we have Dominion, we have Con Ed. These are all good companies, but you've got superior growth profile.
We do. We're going to invest $1.5 billion in CapEx a year over the next 5 years at a minimum. We need to do that. And the beauty is, we're not doing that to drive customer bills up. We're actually doing it to help drive them down, as I give you the example. So we've got a really good growth profile driven by investment that actually drives costs down.
Now, you mentioned that the administration, that deregulation could actually help you. What does deregulation mean? Because I tell people that maybe that's the most important thing that's happened under President Trump, is he favors deregulation. That's a different environment entirely from the previous president.
It is. It is. Of course, the deregulation that we put in place years ago in Texas is different. We've actually deregulated the generation of electricity in our market, made that commodity deregulated, as opposed to the president's proposal to reduce overlay and burden, government burden on the companies, which is beneficial as well.
Well, then that's good for the ratepayer. You're telling me that the customer does better in Texas because of this.
Yeah, they've absolutely done better with competition.
And it seems like that the Public Utility Commission, unless you continue that, I mean, if Elliot's bid comes in and it wants to help the senior creditors and the junior creditors, unless they commit, which I think they will, to making it so that the customer doesn't get hurt, it's not going to get approved.
Absolutely. You have to come in and do what Berkshire did and say, we'll accept the conditions that exist in Texas today. You have to go to Texas first, then to the debtor, then to the bankruptcy court, because not only is value important, closability and quickly. This bankruptcy has been so long and so expensive. The cash burn, we can't drag this thing out much longer.
But the thing is that Elliot was negotiating, and then Berkshire came in kind of out of nowhere. And now Elliot was kind of caught unaware, say.
Yeah.
You're in the catbird seat, but is there a way to resolve it so everybody wins?
I think there is.
You do.
And Elliot made it clear that they're happy to work with Berkshire Hathaway.
Yeah, okay.
They want to make sure they get the best value they can from Berkshire Hathaway. Whether Berkshire Hathaway is willing to change their bid or not, it's Berkshire Hathaway.
But you also have a bankruptcy court that clearly will not want to hurt senior or junior creditors.
That's exactly right.
So you think it all can work out?
We can work this out.
And one last question. Why couldn't we all buy a share in Oncor? Why wasn't it able to come public? Because it would have been my favorite public utility. You know, I'm not kidding. It would have been the best. You know that. It's
a great story. The complexity of this debt structure in bankruptcy, too hard.
Wow. Well, you've done a remarkable job, because I know that, because everybody wants to keep you. That's a good sign. Okay, that's Bob Shapley. He's the CEO of Oncor Electric, just trying to keep you up. And if Berkshire Hathaway does get, I love Berkshire Hathaway stock anyway. I don't care who gets it as long as everybody does the best. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.